Dutch Lady Milk Industries Berhad, which is DLMI, was founded in Petaling Jaya, Selangor in 1963. They are a subsidiary of Friesland Campina, one of the largest dairy cooperatives in the world. The chairwoman is Datin Sri Sunita Maylin Rajakumar, and they are presently directed by Ramjit Kaur Virik. They are in the manufacturing sector since they produce cow milk and dairy products. In 2011, they was expected to be the growing up milk categories market share leader, and now they are still leading the industry.
Nature of the company. The company offers an extensive range of quality and delicious milk-based dairy products, from milk powder, yogurt drink, to fresh milk and ultra-high temperature milk, which is UHT milk, distributed nationwide to help Malaysians stay nourished and healthy, to help them move forward in life.
Factors that make LEASES as common transaction for this company. Based on the annual report year 2020, the company has made many leasing activities. First is leasehold land, relates to the lease of land with an expired lease period of less than 50 years for the company's factory buildings, office complex and warehouse located in Petaling Jaya. The company also leases various offices, motor vehicles, plant and equipment and office equipment.
Next, a stock exchange was announced in 2020. The cash flow from financing activities stated that payment for principal portion of lease liabilities showed the negative amount of Rm 365,500. So this means that there is a loss on the stock exchange. Leases are measured at cost less accumulated depreciation and impairment loss, if any. So the ROU assets, which are the leases, are generally amortized over the shorter of the assets' useful life and the lease term on a straight line basis. For lease liability, they are initially measured at the present value of the lease payments that are not paid at the date. So the company presents the lease liability as a separate line item in the statement of financial position. Interest expense on the lease liability is presented within the finance cost in profit or loss in the statement of comprehensive income. Reassessment of lease liabilities. The company is also exposed to potential future increases in variable lease payments that depend on an index or rate, which is not included in the lease liability until they take effect. So when the adjustment rate take effect, the lease liability is remeasured and adjusted against the ROU assets. For short-term leases and leases of low-value assets, the company has elected not to recognize a lease liability for short-term leases, which is leases expected term of 12 months or less, or for lease of low-value assets. Payment made under such leases are expensed on a straight-line basis in profit or loss. In addition, certain variable lease payments are not permitted to be recognized as lease liabilities and are expensed as incurred.
Next is about evaluate for the accounting for leasing. The company has applied lease based on the following standard on the 1st January 2020. They use the conceptual framework for financial reporting revised 2018. The contract may contain both lease and non-lease components. They allocate the consideration in the contract based on their relative standalone prices, then present the lease liability as a separate line item in the balance sheet, and in the statement of comprehensive income, the interest expense on the lease liability is included in the finance cost.